Hey everybody, Tyler Rowe here with BitcoinTreasuries.net. It's the opening bell on it's I guess Wednesday here, June 3rd. Things move fast in Bitcoin. When price is down, when sentiment is on the upswing or downswing. It's hard to know what day it is sometimes here, sitting in the saddle. I'm joined by Nick Payton, VP of Marketing at BitGo. Welcome to the show, Nick.
Thank you, Tyler. Thanks for having me.
Yeah, you
Happy
got it,
Hump
man.
Day. Yeah, it's Bitcoin's
Yeah.
not helping, but it's okay. We're in it for the long game. So
Absolutely. Hey to all our audience on YouTube and on X. Thanks, guys, for jumping in here. Leave your questions or comments in the chat, and we'll try and touch it all. We're going to be here for about 15 or 20 minutes, and just go over the news. So, I mean, obviously, the lead story is Bitcoin's price. I look over my shoulder at my block clock. We're in the mid 60s, under 67,000. Nick. Um, what do you think? What do you think's playing into like the current price dip? It can't be Michael Saylor selling 32 Bitcoin, right?
it's so funny. It's like he bought tens of thousands of Bitcoin, and the price doesn't move theoretically, or that's what people were thinking. And then he sells 32, and we crash, and now that's the reason. So it's pretty funny. Um, yeah, I mean, listen, if you zoom out, we've got a macroeconomic climate. We don't have the liquidity that we were having a couple years ago. We've got obviously a war going on overseas. People questioning the very world reserve currency at the time. I mean, there's like a lot of underlying things going on. We've got the stock market ripping. We've got AI as a new industry springing up, which is taking a lot of the people who are seeking alpha, whereas Bitcoin was maybe the only name for a long time. And so I'm actually fairly impressed with how Bitcoin's held up. What are we down a little over 50% overall, roughly? And so the last one was up in the 70s, I want to say. And
Yeah.
so, even if we go a little lower from here, let's say the dog days of summer take hold and we have a bit of an accumulation period for a few months. I'm not concerned at all. I was actually talking to my wife last night. I'm sure, like you, Tyler, maybe this isn't your first bear, and so I'm telling my wife, like, we didn't take that HELOC last year. Maybe we should think about it this year to buy more. But anyway, my confidence is not shaken at all.
Yeah, absolutely. As Bitcoiners, we've got it's like confidence isn't shaken once you've been through a couple cycles. And sitting here looking at this price, I've had the same conversations with my wife, Nick. It's like, how much are we going to stack here? What, are we going to sell a sofa or what? But yeah, certainly that HELOC, that equity that's crept over the last couple of years, it does look attractive as a chance to stack. And I think a lot of Bitcoiners are viewing it that way. We've had a lot of talk about some OG kind of selling or sustained selling over the past year, and that made a lot of sense as we kind of hit that psychological 100K number. And I think a lot of that's probably in the rear view mirror. What's your take on maybe whale selling? Like you said, I think it is a bit of a capital rotation for sure. But what are the opportunities for Bitcoin, and what primes us for the next bull market? I'm sure you've got a lot to say about institutional adoption being over at BitGo.
Yeah. Yeah. I mean, if you look at BitGo's most recent earnings, you can see that institutions continue to onboard every day. I think our client base was up 42% year over year, BitGo. And so it's retail that hasn't come into this. And I feel like institutions are just scratching the surface on what they're going to do. So, yeah, it's interesting. I mean, I continue to think that we're in a rotational period, kind of like what you said, which is, yeah, we've had a lot of announcements of institutions coming in, but the actual capital, the big players, the nation states still have not come in the size that they plan to. And so, and then with a little bit of liquidity, or let's say, the AI bubble cools off a little bit and people start rotating back into hard money. That's always what I come back to is like, the Peruvian bull had that dollar milkshake theory, and like regardless of what industries are springing up in advanced technology like AI, which I'm excited about, at the end of the day, if we continue to see a captured monetary supply and we're fighting this uphill inflation battle, I just think that the the hard aspects of Bitcoin are going to prove out over all of these things over the long term. Will be the top performer every year? No, of course not. And that's when I think retail will rotate back in.
Yeah, yeah. I mean, there's like it's easy when we're in the Bitcoin bubble. It's like ecosystem and around Bitcoiners, talking to Bitcoiners a lot, like we kind of fall into the trap of like not realizing, what other investors are looking for. There's so much rotation that happens. There's so much rotations and momentum at play when you're talking institutions, when you're talking even larger, retail desks. I'm curious what you make of, um, the a little bit of the stress that's happening on STRC. Um, it's still only down, 3 or 4% off par. But is that just a function, Michael Saylor's preferred equity product? Is that a function of price kind of sentiment being poor in Bitcoin overall? And do you expect that to rebound? Because I mean, it's been absolutely sh shocking, I would say, to see the amount of capital that Saylor's been able to raise this year, coming up 11, 12, 13 billion dollars already in a bear market.
It's amazing. It's over 5 billion now they've raised from Stretch. Is that right? Just under six.
Oh, it's over 10 billion
Oh,
now.
it's over 10 now. My goodness.
Yes.
Yeah, it's incredible. I always keep thinking about, and now you have Strive doing starting their daily as well, which is amazing. I think it's the beginning of. I think Saylor called it their iPhone moment. I tend to agree. Obviously, you need to have the base assumption that you believe in Bitcoin's hard money aspects and that you expect Bitcoin to appreciate over the long term. If you don't believe that, then of course the naysayers aren't going to believe in Stretch. So with that said, though, I just keep looking at this period, and to me, it's just essentially a stress test. Can the capital structures that are built around Bitcoin accumulation hold up when price is flat or down? And Saylor's proven this that this model has worked over a fair enough time frame so far for us to not go crazy and doubt this. I mean, the 32 Bitcoin sale is not very much in comparison. It's a fraction of a fraction of a fraction of a percent of the amount that he's bought. And I think all it is typical. That's treasury operations. If you have to sell a small sliver of your treasury to keep your dividend product afloat, then that's what you do. And by the way, like there's these individuals who have thrown shade at this. I think Peter Schiff obviously has, and others where they're like, oh, this could start a death spiral. First of all, these dividends are variable, so the rate can change slightly. And again, as long as as long as this is accretive to his to MSTR's price, and that he's a net buyer year over year, I think this is just a part of the machine. So it's a bit of a stress test going on, maybe in the confidence side of things, but overall, the underlying structure to me seems incredibly healthy.
Yeah, I think it is really healthy, and it's just like this product. A lot of Bitcoiners, who maybe are like less bullish on treasuries generally, or the strategy of arbitraging fiat through public capital markets, are critical of this product. But it's not necessarily a product for the everyday Bitcoiner who's just stacking more cheese, right? It's like
That's right.
it's an orange pill for people looking for fixed income for income. And it's not to say Bitcoiners, won't be buying that, but yeah, it's definitely a different product, and its packaging, through a preferred equity model that is has never been used in this way before.
You know who I
I'd like
thought
to,
of? You know
yeah,
who I
go ahead,
thought of,
Nick.
Tyler? You made me think of this on this topic. Is I remember I orange pilled my father. I don't know. This was 5 years ago, and we were in the throngs of a bear. So maybe not quite five, 4 or 5. And we were coming down from the 60,000s, heading towards the teens at the time, if you remember that period. And it was obviously, it can be stressful for a time. And my dad's in his 70s, and he believed in the mission, but at the end of the day, he looked at it as like another asset to invest in a little bit. And so I had him buying in the 30s. And I'll get to the point here, it's related to Stretch. So I had him buying in the 30s, and I remember a couple months went by, 6 months went by, and Bitcoin had gone down to the teens and then was rallying up. And at this point, we were maybe in the 30s, 40s. So he was up a fair, decent percentage if he had just held. And when I talked to him about it, he was like, oh, Nick, I sold down in the 20s. And I was like, Dad, I told you got to hold this thing for a couple years. And he was like, I'm 70. I don't have the appetite for that kind of volatility. And every rationale he gave made total sense.
Yeah.
But when I think about and Bitcoin, obviously in the early adoption period that it's in, has these big momentum swings up and down, and Bitcoiners, especially when you're you're young enough, you kind of say, hey, the downside is the opportunity to the upside. Don't give me your downside volatility. You don't get my upside volatility if you can't handle my downside volatility. But when someone is close to retirement age, not even like my father who's in his 70s, but someone who's maybe 60 or in their 50s and starting to, your risk ratio is starting to tighten. You're not trying to go full like emerging market, if you're thinking of it like a stock market.
Hmm.
So they try to get more into the fixed income to protect their wealth. And yes, we all believe Bitcoin protects your wealth, but if you have a 50% downswing in a year that you're looking to retire or really need that money, that can be problematic. And so to me, Stretch, it appeals to a wide investor base, but it's really interesting to me when you start to think about the retirement age individuals or the soon to be that are trying not to go too far out on the risk curve and can go and get 10, 11% returns from a vehicle like Stretch. So I don't know. To me, it's like opening up a whole new TAM for Bitcoin in a lot of ways, and I think the growth of their product and like we mentioned, Strives, and I'm sure more and more are going to come on board. Um, it's pretty interesting to me as you start to like think about that. So anyway, I just wanted to call that out as a
Yeah.
whole new vehicle for people like that.
Absolutely. It is like you said, I think it really is addressing that a whole new addressable market. And it is going to be really cool to monitor what SATA is able to do, being, the first dividend paying stock that pays daily dividends. There's not even a preferred equity, or let alone any equity on the planet that pays twice a month dividends. Strategy was primed to be the first one. That's going to a shareholder vote next week. But Strive was like, hold my beer. We're gonna get the rules changed. And we're gonna pay daily dividends. I think it could be a game changer. I think it might suck up some capital from day traders who are looking to park some funds overnight. There's gonna be a lot of interesting arbitrage opportunities that otherwise would have been trapped outside the Bitcoin ecosystem. I'm really excited about that. I'd like to shift, and one of the big questions I have when I talk to like Treasury insiders and Treasury execs is, like, yeah, I talk to them about custody. I talk to them about, different derivative strategies and liquidity and all that. And obviously, the big news for you guys at BitGo was that you went public earlier this year, and we're an OCC chartered bank. That was a
Yeah.
big deal, and everybody I talked to, is talking about how big of a deal that was to have the Bitcoin and crypto infrastructure, going public. How has that changed the game for BitGo? And is this just another, I guess, example of the industry growing up, Nick?
Yeah, actually, you stole my punchline, that last bit. That's how we view it. There's been plenty of miners that have gone public. And by the way, these are all our clients, so I'm saying this in a positive way. There's been a lot of miners that were kind of the innovators who went public, and then a bunch followed. And then you had a lot of exchanges like Coinbase go public, and then others followed. We strongly believe that we are the first true infrastructure play that has gone public for this industry, which is a sign of the maturity of where we are on this adoption curve, and couldn't be happier. By the way, when we did go public on the New York Stock Exchange, our gift to the exchange, which is sort of like the novelty thing, we made sure that we gave them a Bitcoin white paper that now hangs in the New York Stock Exchange in perpetuity. So that's like a little wink to
Beautiful.
Satoshi in our community, because we are Bitcoiners at BitGo, of course, and believe in the mission. Um, but yeah, overall, really, really, really happy about what that meant for the industry. And then look, to start, we didn't do it in like a SPAC or anything like that. We went the traditional route because we wanted to do it in the transparent. Well, obviously, we had to get big enough. We've been around
Mm.
since 2013, so we had to get big enough, which is challenging in an industry where you had short-lived players come and go, etc. I mean, BitGo has been kind of the constant since those early days. I'd put Adam back and his company right there, and there was only a handful at the time, and so credit to what Mike Belshi, CEO of BitGo, built. And I couldn't be happier to be a part of it. But yeah, I mean, this is the sign that there's a real transition from a traditional economy to a digital asset economy coming. You see the Clarity Act. We had our OCC charter, which now makes us a federally chartered bank, which is really important. And I'm also an advisor at OrangeBTC, the largest treasury company down in Latin America. And I know they have aims of one day being a bank for the Latin American region. And you hear about multiple of these treasury companies that have the same vision. I think if you base it's easy to call them treasury companies, but really at the end of the day is what we're doing is we're trying to acquire the asset of, I mean, we'll say it's the asset of the now, but let's just say the asset of the future. And once you accumulate the asset of the future, then you can become a bank and open up so many unique product lines from there. I think that is the ultimate goal. I wonder if one day Bitcoin treasuries will companies will be known as like just Bitcoin bank companies like that. That will be the name. So, and obviously BitGo has our own treasury as well. I think we hold just under 2,500 as of today. And we continue to accumulate and use for operational expenditures, et cetera. And so yeah, we're really, really, really bullish on what that meant for the industry and for our clients. Because at the end of the day, like if you're a client and you're coming into this industry, whether you're new or you've been around for a while, like yes, you're trying to earn money with our prime OTC desk or using unique derivative strategies, writing covered calls or butterfly spreads. There's all of that, of course. But at the end of the day, if your money and your clients, so we have clients, but then they have clients. So clients of clients. If your clients of clients' money, we're talking billions and trillions of dollars in some cases. It has to be kept safe. That's like the foundational table stakes item, which is that's the difference between BitGo is every dollar that's kept in BitGo custody is kept in a bankruptcy remote fiduciary responsible separate account. So you hear about like Prime Trust just made headways like they're trying to claw back money because they're a custodian who went under. Well, they weren't segregating the accounts and they weren't being kept in bankruptcy remote accounts. And so that's just not what a true custodian, that's not acting as a fiduciary. That's the difference with BitGo. Is even if and BitGo is in great shape, you can look at our public earnings, of course. But like let's say BitGo didn't exist in 100 years from now, those trust assets would. There's no clawbacks. It's nothing, and that's how everyone should structure their lives. So anyway, again, I'm going into the weeds a little bit about BitGo, but really really excited about what we bring to the market in that Rails and AWS piping underneath of this entire industry.
Yeah. I think the IPO moment for BitGo was a real signal to the industry. Tracking all the Bitcoin treasury companies, it was a big deal for them as well. To have that peace of mind that you're a regulated public entity, and I think that was a big deal for everybody in the ecosystem. Thanks for joining us, Nick. I did want to. I always try to get a comment up here. Sandeep Star on YouTube says he's got his HELOC maxed out at 6.4%. Put it all in on STRK at 11%, which is a no-brainer. He says as long as BTC doesn't go to zero. So good luck there with the trade, Sandeep Star. Again, thanks for joining us for the opening bell, Nick. Tell everybody where they can find you online and more about BitGo.
So BitGo is just bitgo.com, at BitGo handle on all socials, and then I'm on Twitter or LinkedIn, and it's just at Nick D Payton. D is my middle name.
Great stuff. Thanks everybody for joining today, and make sure you stay orange. Take care.